All right, buddy, we're live on this beautiful Manic Macro Monday. That song is by the Bangles. I always like that song. It's kind of a girly song, but I don't care. I like it anyway. Thought it was a good title for today. We got a lot of macro Fed stuff going on.
That's right. And it is the May 15th Macro Monday edition. Biggest wet blanket, I'll say it again. The biggest wet blanket we have to be concerned about this week is that there's a a sizable number of Fed talking heads that are going to be doing their absolute darndest to try to make things difficult for this parallel system. And more importantly, they're trying to protect what they I'm just going to say it. The 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 Fed's credibility is well. Let's be honest. Like most government entities and agencies and things, they have a little stink on their shoes, and their credibility is at sometimes it's worse than others. Sometimes it's kind of okay. But I'm just saying this. There's this the Fed double speak is what, like, really, if you're paying attention, it gets exhausting. And the irony here is that not enough people are paying attention. Not enough people who participate in the American system are paying attention. And this goes back throughout all time of our existence as a nation. Okay, so I don't expect this to change necessarily, but according to my constitutionally guaranteed rights, I'm allowed to bellyache about it openly, which is what I'm doing right now. All I'm trying to point out here is that Fed talking heads, Fed governors are going to be talking across the board and various types of things. This stuff's all scheduled ahead of time, obviously, but the point I'm trying to get to is that the narrative is going to be probably, not financial advice here, but if you look at what the current policy stance from the Federal Reserve is that rates still need to be higher, and just like they were way behind the curve on the other end of this when they're saying, oh, inflation's it's all the whatever the thing is that we're supposed to be concerned about is transitory, and then this kept rates lower longer than they probably needed to be. And now this knee-jerk reaction to the upside has caused a tremendous amount of chaos. It caught a bunch of people with their pants down in many respects, or you might maybe in a gentler way to say it is that people got caught off sides in the banking system, and some of them got seized, some of them went under. It sparked, in my opinion, some, I'll call it short-term, relatively speaking, short-term anxiety about the financial system. But the other reality that it has uncovered is that there are these too big to fail banks, these too big to fail institutions like the J.P. Morgans, the Bank of America, Wells Fargo, et cetera, that are absorbing all of these deposits from people, and it's wiping out these smaller banks to some extent. Now that sounds awfully pessimistic, but I mean, let's call it what it is. It's just a land. It creates the opportunity for a land grab, in my opinion, for the bigger banks to get even bigger, and all it does for innovation and for things that are coming down the pipe in terms of like technological advancements and innovation in the way that we as people have access to our money, what our money is, how we use it, how we spend it, is just further. It's going to be more and more difficult, and there's just going to be all these shackles on us, monetarily speaking. And as long as the people in the financial system, the banks, for example, have their hand in the transactions that are going on between us, they seem to keep it down a little bit, and they're less heavy-handed with their lobbying efforts. But the point I'm trying to get is that this parallel system, the ability for people like you and I to transact on a weekend without the need for a bank, is a big problem for the business model, and it's likely to get even uglier, in my opinion, as we get closer towards the Bitcoin halving event, the presidential election, the Fed's the Fed's stance on where rates need to be, and more importantly, access to credit in the current system, and what happens economically with regard to like how many jobs are affected. Like, I'm talking like broad spectrum here, like across the board from an employment, like who's getting laid off and what quantity are people getting laid off, and how does that affect consumer spending. And at the end of the day, what we're trying to learn how to do here is weather this type of short-term cyclical madness that is unfortunately a part of the system, this debt-based system that we live in. And the other big glaring thing that's staring up, or the other elephant in the room is probably a better way to say it, is that the need to refinance the debt, nationally speaking, every 3.5 years. But there's this constant need to refinance or roll the debt, and that is a problem when it's a problem, and then it's not a problem when something else grabs our attention. But anyway, back on point. We've got a lot of Fed governors talking today, and on a positive note, we saw Bitcoin's price do something rather cool, in my opinion. Is that there was a correction back down to about the 26,000-ish level, maybe a little bit below. So if you were very aggressive, let's say for a moment that you were positioned to try and take advantage of this relatively small pullback in price, and you had your bids set anywhere between, say, 25,850 and 26,000 on Friday, for example, into all of this doom and madness into the weekend last week, you got filled, and we've had a nice move higher. And I think it's part and parcel with what we're talking about on many other broadcasts. We're still in this range. There's still very strong demand at these levels, the 25, 26, 27,000 level. There's still very strong demand there. There's still very heavy supply, though, in the 30, 31,000 range. So this is just something that we have to contend with in the short term until we get some clarity. The markets in general start to get some more clarity about what the Fed's next real big move is, and what the next 2 years look like. And what I'll sum everything I've been saying up to now with this is, as soon as we get some sort of catalytic event, meaning a catalyst, not necessarily negative, not necessarily positive. It may depend on which side of the table you're on, whether you like it or not, this catalytic event. But what we're looking for is some clarity, which is going to be, it's hard to do, but we're looking for clarity. I say the markets are looking for clarity for around where they need to be positioning as we get towards the next major, I'll call them milestones in our nation's history, which is our next presidential election. And this other really important thing I'll keep talking about is the Bitcoin halving event. And there's these things, this convergence or confluence of events stands to be very catalytic in nature, meaning it should be a catalyst, in my opinion, and we should be thinking about how to position and how we are positioned for that. So that's my take.
Yeah, I like I talked to you before when we were getting ready to go live here. I kind of tuned it out this weekend, and it was interesting because I opened it back up today, and I was like, I saw the price action over the weekend, and I was like, all right, well, we're back to where we started, Friday afternoon when I tuned it out. And so it's interesting that you can take that approach over a weekend, or you can take it over a week or a month or a year. And part of crypto investing and Bitcoin investing is understanding the fundamentals of Bitcoin and essentially being able to tune out a lot of the noise. And I think what's happening right now in regards to the markets and all this Fed, action or non-action, is that the fundamentals of Bitcoin remain unchanged. You could listen to all this and go over it, which we do. I think it's important to understand. But at the end of the day, in relation to Bitcoin, does it ultimately matter? I think that's the question we're going to find out, right? If we end up in a recession and credit tightens and the world looks a lot different than it used to, I think we're going to see how Bitcoin performs. My bet is that Bitcoin is going to do what Bitcoin always does and outperform in the face of all of this stuff. But this stuff is important to pay attention to and kind of wrap your head around because it does matter. my interest here is what Bitcoin and crypto are going to do. And so, Ted, when you say the halvening, let's kind of explain that for people that are new, what that means. And I think a lot of people do understand it, but if you're new to this, it can be somewhat confusing. You say the halvening, well, why is that a big event? Well, essentially every 4 years, what is it, every 210,000 blocks?
That's right.
Ted, the amount of Bitcoin released to miners gets cut in half. So the very easy way to understand this is the supply of the supply of new Bitcoin created by miners released into the markets and into supply gets cut in half.
That's right. So let me provide some base layer context, so to help further understand this thing that on this, like in the beginning, it's not intuitive necessarily, and that's not a bad thing. It just is what it is. But let's say that you're a company and you issue 10 shares, okay? But before you do any of that, you're an organization. You think, we want to raise money. We want to give. We want to be able to provide something for people that have dollars, which we want, and we want to be able to trade that with this instrument called a stock, a share of stock. And what we'll do is we'll issue 10 shares to the public, and anybody can buy them. And then the public, members of the public, can trade. They can swap amongst themselves, and this constitutes a market. There's a buyer and a seller in the general public for these shares. Okay, let's say there's 10 of them, and they're worth $10 each. Now, as a shareholder, you think, okay, I'm going to give my $10 bill over for one of these shares. And my hope is that at some point the company continues to build its business and its revenues grow, and then the value of the share is going to increase because the company became more valuable. Okay. But let's say that the shares go from $10 a share, they go to $12 a share. The company has grown, their revenues reflect this, etc. And then someone at the corporation says, well, wait a minute. Our shares are worth more than the $10 when we issued them. Let's issue some more shares. Let's create some more shares out of thin air and sell them into the market. Now, let's say if they do that at the $12 a share price, and let's say that there are only 10 shares, but they create 10 more shares. So they double the supply of stock available to trade on the open market. What happens to the price of the stock if you double the number of shares? That's an easy math. Okay, it falls by how much? Half, exactly. So all of a sudden, my cost basis is $10 a share. I look at my portfolio. Oh, look, I'm up. My share is worth $12, and then the next day, the company does an offering, and they double the amount of shares in the market. My $12 share is now worth $6 a share. But my cost basis is $10 a share, so I'm down 40% all of a sudden on my stock.
Well, don't they when they do those stock splits, don't you now have double the shares at half the price?
If that was a split, yes. Okay. But that wasn't a split. So a split would be you're trading in something you have to them, and they're giving you two back. That's a traditional split. But this is where we're creating supply out of thin air, and that there's more shares on the market. And you as an existing shareholder have a choice. You can do nothing, and you can be down 40% all of a sudden on your initial purchase, or you can choose to buy more shares at a discount, which is what some people do. So there's two ways to look at this, but I'm just trying to paint the picture and help people understand this idea of supply. And then the concept of dilution. Okay, so by adding supply in the form of shares, you're diluting the value of the existing shares. That's the point. So this tees up this concept in Bitcoin, where before, when Bitcoin was created, there was no Bitcoin circulating. Okay, until some was generated during the creation of the Genesis block. And there's this concept in Bitcoin called a block subsidy, which means that every 10 minutes or so on the Bitcoin blockchain, when a new block is minted, it releases, it is a controlled release of additional supply of Bitcoin into existence, first of all, and then into the pool of the supply that can be transacted among participants in the network. Okay.
Yeah, and real quick here, the reason that people mine Bitcoin is all this is, it's a bunch of computers trying to figure out, solve the math problem to get the block subsidy. So whatever graphics card or Bitcoin miner solves that math problem gets the block subsidy reward.
That's right. And this is to validate the transactions on the network, keep the network secure, and ensure that there's no such thing as double spend, and you have really hard, solid, trustworthy money that you can use to transact with people. Okay. So in the beginning, the Genesis block, the subsidy was 50 Bitcoin. Okay. And then after a certain amount of blocks, so after 210,000 blocks, and every block would administer or issue more Bitcoin into the system. After 210,000 blocks, that subsidy would then get cut in half. So instead of 50 Bitcoin being issued, if you think about that at today's price, it sounds insane. But the point I'm trying to get to is that it had to start somewhere. And every 4 years or so, every 210,000 blocks, the subsidy gets cut in half globally. So instead of issuing 50 Bitcoin per block, it went to 25 Bitcoin, and then it went to 12 and a half, then it went to 6.25. And we're currently today in today's world, when someone successfully mines a block and is given the privilege and the responsibility of writing a block. This is all happens in the software automatically. You write the block to the blockchain, the network accepts it, and the reward is the block subsidy, which is today 6.25 Bitcoin, if I got my math correct.
No, that's correct.
Okay, so what I'm trying to tell, or what we're trying to paint a picture here, is that we're like 100 and some thousand blocks into this epoch, or this chunk of time, roughly, and it's estimated that next year, sometime, maybe earlier in the year, like what, April, May-ish, is that what we're looking at? We're tracking towards. So when we hit block, so we're currently at block 100 and some thousand during this chunk, and you look at and when we get to the 210,000th block during this chunk of time, what'll happen is across the board, the Bitcoin network, which is almost an organism at this point, you can think of it that way, will systematically shift to start, for every block that's minted and inscribed into the blockchain forever, the subsidy that it pays, the reward, will be cut in half again. So it'll be 3.125. Yes, that sounds right to me.
That's correct. Yeah, no, that's correct.
So the point of the picture we're trying to paint here is that the Bitcoin's monetary policy is that every block that gets minted throughout time pays a small subsidy to the miner that solved the problem and kept the network safe and secure and can be trusted. Okay, and this idea of issuing supply into the market is what I was describing prior with the company issuing shares. What happens when a company issues shares is that the board of directors people decide, almost in some cases it feels like it's arbitrary, but usually there's some reason, whether it's good or bad is not for this discussion. Someone issues shares, or they manipulate the supply in some way, and you don't have any control over it. It's not known ahead of time usually. So you, as a public member of the public that's buying shares, you're investing in this company, for example, and they're just issuing more and more shares, diluting the price of them and increasing the supply. This is a problem for some. It's not a problem for the organization, and they'll say they abuse this privilege, or they take this action too many times and people lose trust, which is what happened. If you really want to understand this whole supply dynamic, look at how penny stock. First of all, there's concepts of penny stocks or OTC, over the counter, corporations that are it's somehow legal to do this in the U.S. is they can issue shares, they can issue press releases, pump the price up, issue more shares, sell them into the market, raise money, and then shareholders are left holding the bag. Their shares are down 50, 80, 90% during these events. This happens every day of the year. It's a whole nother can of worms, but it illustrates an important point is that company stock can be issued without a second thought, in broad strokes. We'll transition over to talking about how the Federal Reserve creates dollars. The supply of dollars is a big deal in our economy and in our financial system. If the supply of dollars is lower than prices for things, companies are competing to sell their goods and services to other members of the public in exchange for dollars. And you see prices sometimes change over time, and there's a supply and demand dynamic that goes into play. When demand is higher, people will pay a little bit more because they have to compete with others that are trying to buy that thing. The point I'm trying to get to here is that in contrast to, or not in contrast, the Federal Reserve can issue new US dollars at the stroke of a keyboard nowadays, now that dollars are technically electronic. I don't want to say digital because it's not the same thing. They're issued electronically, and the supply of dollars in the system just keeps going up. And we as citizens don't have any control over this. And there's this, you look at what things have, like the cost of livings and this inflation concept, it's the same thing I was describing earlier, is that the amount of dollars it takes to buy the same things just keeps going up over time. And this is why a lot of people choose to invest their money. They buy things like real estate, or they buy stocks. We were talking about stocks a minute ago, but the point I'm trying to get down to is that this idea of monetary policy is something that's baked into the Bitcoin's DNA, is that there's a known ahead of this is the big differentiator here. Bitcoin's monetary policy is programmed in at the fundamental, I'll call it the DNA level. We know ahead of time how often the Bitcoin monetary policy is going to shift. It's every 210,000 blocks. We know how much supply is in the system, or how much Bitcoin has been created during its existence. We know how much is going to be created all the way up until the very last Satoshi will be issued into the market in 2140. That's next century, 40 years into the next century. Okay, we know this because the underlying application, the software that powers the Bitcoin network, it's called open source. Anybody can look at it. It runs on millions of computers. The network polices itself and enforces this monetary policy by design. And no one person, no nation state, no government, short of the sun blowing up and taking us all with it, is not going to be stopped. So in summary, this idea of Bitcoin's monetary policy being fixed and its supply known ahead of time, what the release schedule is, makes it a very compelling store of value over time. And that's hopefully that gets you started with trying to understand what Bitcoin's monetary policy is, what this halving event stuff that people talk about is, and why it is a big deal.
Yeah, and I think that's basically why I say that most of everything happening right now outside of what you see on this chart right here is noise when it comes to Bitcoin, because we know in advance what the supply is going to be years into the future. And you could go back and forth and argue with me about whether it's a supply issue, or you can use all the big brain arguments as to why supply doesn't matter. But at the end of the day, it does matter, right? And this is again something that I always like that chart with the left curve and the right curve. The guy on the left, he's the idiot. He says supply matters. In the middle, there's all the big brain arguments about why it doesn't, and then on the right-hand side, there's a genius that says supply matters, right? So we know for a fact that the supply of Bitcoin released into the market is going to continually decrease. Now, the thing you can't predict is the demand, and what we're starting to see And what we have seen over the past few years is the demand, the amount of wallets created, the interest in the space continues to grow. All these things, all the fundamentals of Bitcoin remain the same. The only difference is there's more people involved now. And so as more people get involved, the supply will continually decrease. And in the long term, that's why I think Bitcoin's going to keep doing whatever Bitcoin's going to do in the face of whatever these governments all over the world continue to try to fumble around with monetary policy. And so what's interesting is, there is no, they don't know, right? And so all these currencies, it's all relative to each other, right? The US dollar is strong relative to the yuan or the euro or, any other currency. So they can get away with a lot, the United States, because we're right now we're the world reserve currency, and they know that, everybody else knows that. Yeah.
One thing to interject, your point about it being a reserve currency is important, but I think the thing to remember is that when your reserve currency is the US dollar, it creates demand for the dollar, and that makes it strong. It puts selling pressure on these other currencies in other countries, because they get, people earn in euros, or they earn in Great British pounds, or they earn in the Japanese yen. But what do they do with it? They swap it or trade it, sell it for dollars to hold those. And what we're trying to say is that here, what we think the better move is to take your dollars and put some of that purchasing power and store it in Bitcoin as a base layer asset that you should consider your own personal treasury reserve asset. That's the way I treat Bitcoin, is that Ted's personal, like the treasury of Ted holds in reserve Bitcoin.
Yeah, no, and I think that's a good way to look at it too, because what they're going to do, right, with the debt ceiling issue, they're going to come to an agreement. It might be the last hour. They might fight over it. They might shut the government down. But at the end of the day, the only choice they have is to raise the debt ceiling. And if they don't, they default, and we'll see what happens. But, over time, I don't think there's any other option. And I listened to the All In podcast over the weekend, and they kind of talked about this. That's a good one to listen to. Those guys have a grasp on it. You can like them or not like them, but it's interesting. They've all been pretty successful in the U.S. dollar game, through investments and things of that nature. So I get a lot out of that podcast. But Chamath was basically saying, he made a bet with the other guys. He said, I think the U.S. debt will go to 200 or 300 trillion before it goes to 50. So essentially saying that, look, there's one way out for this. And his point was, look, it's all relative. All these currencies are relative to each other. You can argue to your face, blue in the face about this, but that's just it. It is what it is. And I think as far as I can tell, I don't want to play that game. I'm not a billionaire VC investor. I don't really worry about having millions of dollars in a bank, right? Like, what I'm trying to do is protect my wealth into the future. And so if they're going to continue to increase the debt and debase the dollar, I want to be in something whose supply schedule and inflation schedule is well known in the future. And I can kind of ignore all the rest of that stuff, even though it's going to have an impact on the economy and the way people live their lives. I kind of look at all that stuff and go, all right, great, you guys can do that. I'm going to be over here, holding Bitcoin. And that's the simplest way that I can kind of articulate the way I look at this. And in the interim, it's going to be tough, right? Because you've got all kinds of entities that are, proponents of the dollar that see Bitcoin as maybe not a threat to that, but something that messes with their ability to mess with the dollar, right? Because it's very complex and dynamic. But as soon as I'm willing to bet, as soon as we're done with, J.P. Morgan will change his tune. Jamie Dimon will change her tune about Bitcoin as soon as it's beneficial for J.P. Morgan. I think they get out there and they say, Bitcoin is garbage and all this stuff because they're taking a different position right now. But as soon as that changes, as soon as it's beneficial for them, they'll be, Bitcoin advocates. And so you just got to understand that's the game that they play.
Yes, this there's there's been some talk, some chatter on the old inner tubes about de-dollarization, and I have to laugh at it. 10 years ago, I would have been scared, perhaps, but all I do is laugh at it now, because what people fundamentally don't understand still is that you can trade in these other, like, for example, if Russia wants to buy or settle their trades with India in rupees, what's the market globally for rupees? There isn't one. Okay, the take this next statement with a grain of salt. Is that allegedly the Russians have a bunch of rupees sitting in Indian banks that they can't use because people don't accept rupees other places like they accept the US dollar in other places. So how on earth are they going to buy the things that they need from other places in the world if they can't get somebody to buy their rupees from them? And they can't transact in North Africa with rupees. They can't transact in Pakistan or wherever the hell else they want to buy stuff, or you know what I mean? They don't bring rupees back to Russia and let them circulate in the Russian economy. What does that do to the ruble? That completely destroys the demand for the ruble, doesn't it? I
Yeah,
mean, if you do
and
it at
with all
scale.
this, yeah, all this de-dollarization. I mean, these countries, you got to remember, like, they have a pretty good incentive right now to de-dollarize and get away from the United States, mainly because the United States has turned the dollar into a financial weapon. And so they all look at each other and they say, okay, this is ridiculous. We don't want to do this anymore. Fine. All right. You guys want to make your deal and join BRICS. But then you got to turn around and look at each other and say, hold on a second. Do I trust China? Absolutely not. Do I trust Russia? They don't all trust each other anyway. So I think the way they get around that is, like, the BRICS is going to have to go to some sort of a commodity backed money. They're going to have to use gold. They're going to have to use Bitcoin. They're going to have to use something that can be trusted. And the issue with gold is, again, are you going to trust China has the amount of gold they say they do? Are you going to trust the United States has the amount of gold they say they do? I don't. Unless they figure out a way to show me. Ultimately it doesn't matter, right? They could say, Josh, we have 8,000 tons of gold, and if you don't believe us, you can piss off, and I would just have to piss off. There's not a lot I can do. But, the one thing I can do is say, okay, fine, I don't really care. I'm just going to hold Bitcoin, And I think what this BRICS, alliance is going to have to do to trade with each other is they're going to have to find a trust somewhere, right? Within trading. And so, I think you could do it with, gold. There's a lot of talk about, digital gold and not Bitcoin. But again, you've got this issue of, they can create, just say they create a blockchain that uses gold, and they're going to tell you they can verify it and track it, and it's 1-to-1. And again, you got to trust them. And in this world, I'm categorically telling you, no one trusts each other. And that's why Bitcoin is different. You don't have to trust anyone.
That's right. And here's the thing, is that what Bitcoin offers is very compelling in my mind, is that you don't have to trust anyone at all. And here's I guess what I'm trying to communicate with this is that right now, what other countries trust in more than they trust the US government is they trust in the demand for the US dollar around the world. That is a faceless, nameless force that you can't stop right now. It's like trying to stop the tide or the wind or the rotation of the earth in one direction, the current direction that it spins. Okay, it is something that you either step in front of it and hop on for the ride, or you get bowled over. Okay, that's what I'm trying to also, this idea or concept that I'm conveying is that right now here in the US, it's politically speaking, it's necessary for the big banks to talk Bitcoin. They have this, like, their posture is one way, but postures change, because right now the only way because of perception and politics and policy, like at the corporate level, you can't own Bitcoin because it is a threat to the underlying payments infrastructure. Banking institutions fundamentally earn their revenue. So what I'm trying to get to is that the current trade or the current posture in the financial world is to not touch Bitcoin and hold it. It's to use derivatives like futures. And the trade has been to short or sell futures contracts against the price of Bitcoin, because that market is its own liquidity, its own money, and people are able to make money without ever having to touch Bitcoin over here. That's okay. That's, hey man, that's life until Bitcoin's adoption curve starts to ramp up and there's way more demand globally. And this is where it gets really interesting: network effects, et cetera, et cetera, et cetera. People waking up one mind and one Bitcoin wallet at a time, and they start to put the pieces together. This monetary puzzle, like how the hell am I going to survive and even potentially thrive where I am, given the current conditions, the economic conditions, the societal conditions, et cetera. There's a better way. What I'm trying to get towards is that this demand globally starts to pick up, that like unstoppable force, the macro force, as it were, will create the conditions where corporations and other nation states don't have a choice but to start looking at it differently, because it will become very clear that they don't have to trust that someone's going to take the rupees off their hands if they sell things to India and get paid in rupees. This whether we like it or not, nation states will have the ability. I don't know when this will happen. I don't know. I mean, maybe it won't happen, but I think it's very likely. It's like the probability is pretty strong in my mind, is that at some point you won't have to trust in anything but the demand for Bitcoin globally. And because you don't have to trust the central bank in that country, like, people are rightfully pissed off at the Federal Reserve, because think about all the people in other parts of the world that ditched their local currency, or more importantly, they borrowed in US dollars to fund their businesses or do things, or like they took on all this dollar denominated debt. And then the Fed's like, let's raise the rates like by like 11 billion. And all of a sudden your US dollar denominated debt takes more and more and more of your local currency, which you had gotten rid of in the first place. Now you have to earn twice as much, or 40% more, or 30% more, just to make the same debt payment. That makes life really, really hard in other parts of the world. And that's why people don't trust the Fed globally. But there's still, the demand for dollars is still stronger, and it's that unstoppable force today. But imagine a world where you don't have to trust any central bank, you don't have to trust any politician. All you have to do is look at a global digital monetary network that can't be manipulated by human beings in the ways that other things can be manipulated. And you don't have to trust, you can verify it. If you want to send $1 billion, or if you want to sell $1 billion worth of stuff to somebody, you say, sure, we'll take Bitcoin for that, and here's how you do it, and boom. And then you take the Bitcoin and you do whatever you need to do with it, and you hold it or you trade it for your local currency. But I think, like what Michael Saylor says, is not my idea, is that the Bitcoin network, by way of all of its L2, the Lightning network on top of that, et cetera, is that it creates a global rail for the US dollar, because I don't think the US dollar goes away, because it's still, whether you like it or not, people would rather hold dollar. If you're outside the United States, you're in Africa, do you want the local currency? No, you don't. You want the dollar, because you can at least trust in the demand for the dollar and the power, that the purchasing power it gives you in that region. So that's
Well, and you got to remember too that these governments and nation states are literally going to try everything else before they adopt Bitcoin. They're gonna try everything that's not going to work because of a myriad of different reasons, and then eventually, as Bitcoin continues to grow, as it continues to get adopted, I just saw last night that you can now purchase real estate in Florida with Bitcoin, and so you have these little milestones that keep continuing to get hit, like the country of Bhutan is, mining Bitcoin. You've got slowly but surely, and I think one day you're going to wake up and you're going to go, oh my God, this is right in front of us the whole time. But until then, what you're going to see on the media and in the news is every different contortion and twist they can make to try to tell you that this isn't happening, when you can see it right in front of your face and you understand that it's happening. And you got to realize that there's no incentive right now for nation states to do this because they get their power through the currency they issue. All right, and it's going to be a bumpy road, and I think we've got a while longer. But in the face of all this stuff, all you can do is look at this and say, okay, nothing's changed fundamentally with Bitcoin and how it works, despite whatever the rest of the world is doing or trying to do, or talking about going to digital gold, forming a BRICS alliance, de-dollarization, all these things, right? This is part of, they're going to try everything else first. They're going to try CBDCs in certain places. They're going to try, and the people aren't going to accept it.
And then when all these things fail, and they go to Bitcoin, they're going to be like, "Look, we've been trying to tell you all along that we shouldn't have been doing this Bitcoin thing." That's exactly what will happen. Mark my words.
But yeah, as we wrap this up here, I wanted to share one thing with you. This Markets and Mayhem on Twitter. He's pretty good. I like this account. Something for you guys to check out as far as macro goes. Here he's saying inflation has shifted from goods to services following demand. The good news is we're likely past the peak of inflation. Bad news is we won't see 2% anytime soon. So, these rates are going to stay higher for longer. My bet is they continue to raise rates, and they'll do it as long as they can. There's other people that say they have to cut. I don't know what they're going to do. I don't really care. I'm just buying Bitcoin and crypto. You can call me an idiot. I don't care. 3 to 5 years from now, 2 to 3 years from now, whatever, I think it'll be a different story. I got about 20 minutes into this. He had a video, Fed cycles and pivots, job markets, credit conditions, commercial real estate, tech inflows, and breadth. I think this is I think he'd do a really, really good job of explaining stuff that Ted and I talk about on a day-to-day basis as far as macro goes. But that's what we want to do here. We don't want you to just listen to us. We want to share resources where you can go and learn about this stuff for yourself. And this was something I found today. I've been following Markets of Mayhem for a while. It doesn't tweet a whole lot, but I think this was a good video that you should check out to kind of get an idea what he's thinking and try to form your own ideas around this. But I just wanted to throw that out there as we wrap up as another resource if you are so inclined.
Yeah, just an excellent resource. I think the thing that I would like to communicate in summary here as well is that there's a lot of unnecessary complexity and other madness that gets tossed around in the mainstream media from day to day, because that's the model. Is the model is that the mainstream media outlets need eyeballs on the daily, okay? And if they lose eyeballs, they lose revenue, and it's just a business, okay? It's a business. I'm not knocking business. I'm just saying this is how it works. It's infotainment. It's not informational, and it's entertainment just in disguise. All right. What I'm trying to communicate here is that if you zoom out for a little bit and try to start developing an understanding of what Raul, this is not my idea, but I love that. I like this idea. I dare say I love that I have the ability to find this kind of information on the internet. Thank goodness for the internet. And thank God for Bitcoin. Anyway, the point I'm trying to get to is you listen to the Raul Pauls into the world. They talk about inflation's not the thing. And these guys are talking about this inflationary thing is shifting. It's not where we thought, or what we were been told. But the debasement of currency is going to continue. It has to, or else the system, our world, we inadvertently bomb ourselves, quote unquote, back into the Stone Age if we don't roll the debt and we keep issuing more debt and we keep printing more money to monetize that debt, and more money gets pumped into the system so that people can borrow at ridiculously low rates to buy their houses, to buy their cars. They lever up at the individual. That they take their income and they lever up, hey, that's what I did to buy my house. And this is the system we live in, and it's going to continue. It doesn't matter what you read in the newspaper from one day to the next about the debt ceiling debate. It's going to change, and it's going to get raised. And I think was it Chamath on the All In said that he sees 200 trillion in debt. We're at 30 now. We were at 8 during George Bush Jr., George W. was we were at 8 trillion ish. Don't quote me on that. Look it up. It's I mean, take it 5 seconds. The point is now we're like 3 times. Back then when W was president, if you'd said our national debt's going to go from 8 trillion up to 30 by by 2023, whatever year, I don't even, time is an illusion to me anymore. Okay, what I'm trying to get to is that there's going to be a time when we're at 60 and people are going to be like, oh yeah, it's no big deal, whatever. I make $400 million a year at McDonald's and my mortgage is, $97 trillion for, or, whatever. Like the numbers are just going to keep going up and up and up. And what isn't going to change is Bitcoin's monetary policy. So when I look at Bitcoin, I think, man, in 2032 or 2033 now, 10 years from where I am now, I'm the probability, the likelihood that I'm going to look back on the choices I made today and then in the last 2 years, okay, it's very good odds, okay, because that's all we have are probabilities, okay, there's no certainties in anything. The probability is very good that I'm going to look back on this and think, man, like Warren Buffett or whoever said this, a good time to plant a tree was 20 years ago. The second best time is now. Or, have the shade from the tree. I think the Bitcoin tree is going to be casting some very pleasant shade in the next decade here, monetarily speaking, and keeping us, protected from all this debasement. And look at what Raoul Pal talks about in terms of debasement, and that is the real threat, in my opinion.
No. It's important to look at it. I mean, think about debt at 200 trillion, rates normalize at 4%. I mean, that's an interesting scenario to find ourselves in. But, we'll see how it plays out. But yeah, if you want to kind of get a better idea, check out this Markets and Mayhem video. And we can wrap it up there for today. As always, do your own research. Nothing Ted and I say is financial advice. It's not legal advice. It's not accounting advice. It's for informational and educational purposes. So if you enter these markets, you do so at your own risk. Godspeed if you do. So we'll wrap it up there and we'll